Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin in the travel sector, which has been under pressure since the beginning of the war in the Middle East. Philip Pepe from Shaw & Partners argues that interest rate rises are positive for a stock such as Hello World Travel because those who use the booking platform are more likely to be older with little debt and will have more disposable income.
The person who uses a travel agent wants bricks and mortar service, typically a family of four. Usually the wife takes the lead and she'll book a trip for her family somewhere overseas, multiple airlines, multiple hotels, complex trip, and he or she wants someone to call if there's a problem, if there's a flight delay, if there's a storm. I want to call someone and deal with it for me. I don't want to deal with it myself.
However, Michael Gable from Fairmont Equity says you need to be driven by the chart.
You need to see that it's either bottomed out or at least has some upwards momentum.
It looks like a bottom.
Yeah, that's
Heard that before.
It's had a few bottoms, hasn't it? So look, I mean, I don't see that yet. So look, I'm sure feels right, but until I see that, it's not one that I would hold. So I would have to sell my shares if I had it to Philip. He could buy it off me, and maybe you could sell your energy, and I'd be buying energy stocks. That's what I'd rather be buying here than Hello World. So we've made our market.
Well, turning to the property sector, and while it's still mostly a property trust manager, Goodman Group has pivoted into data centres and has landed a contract with Amazon, which makes up 11% of its revenue. Michael Gable says the chart prompts him to sell it, but he'd look for a re-entry point.
Yeah, Goodman Group's been good to us over the years. It is one that we sold mid last year. It is struggling. Yeah, I agree in that pivot into data centres will prove to be a very smart move. But you know, it makes for a good story. But as we could see, the story hasn't translated into share price appreciation. I think Goodman Group, in terms of valuations, definitely got ahead of itself about a year or two ago, and now the share price is basically back to where it was 2 years ago. So, you know, there's been a bit of water under the bridge. The share price is the same. I think that's constructive for it. You know, rising interest rates is a bit of a headwind in the view of investors in terms of valuations, what it does to debt. Not that Goodman Group has a lot of debt. So, look, I think that at the moment it's hitting a bit of a resistance line. It could come back a bit. It could be a situation maybe later in the year where we start to feel as though, okay, maybe if rates have peaked and there's a bit more visibility with what's happening with data centres and because obviously there's all these wild sort of assumptions at the moment, then Goodman Group will be something to get back into. But yeah, look, at the moment I don't think it's going to go anywhere in a hurry.
And finally, a look at the oil chart. Richard Weissman from Weissman Consulting says while we could still see spikes in the Brent crude price as high as $150 a barrel, they're not going to be sustained.
119.50 is still the level on a closing basis, even though we did spike up to 126. So yeah, there's 126, and obviously if you go way back in the charts, there's 130 even. But for right now, it seems like that area is holding. What that means for us is that we might enter a pretty wide range where 119.50, 120, call it for a nice round number, and 86 becomes the range. Of course, there's two sides to this. It's a ticking time bomb where, we're running low on refined products, especially in Europe and Asia. So everyone needs to do a deal. I think the US needs to do a deal in order to keep the price below that 119.50 cap and prevent a recession. And I think Iran needs to do a deal in order to get hard currency. Because as long as this naval blockade is in place, they get poorer every day. So I think despite all the kind of saber rattling, jawboning, I think there's tremendous incentive from both sides to do a deal. exactly what it looks like. I'm guessing that it's going to be cloaked in compromise where both sides are able to claim victory. But the bottom line is oil needs to start flowing.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.